what? Crypto crown, drifting Lambos through your town. Hodlers better buckle down, 'cause it's the final countdown.
Well, camera number 2, welcome to Krown's Crypto Cave, waking up for a very early Tuesday morning over here from Helsinki, Finland, very cold as well, and wish you a nice and healthy, happy hedge morning to yourself over there in whatever part of the world that you exist in. Anyways, we have a lot to talk about today because, well, it is today is the day of reckoning when it comes to the good old traditional markets, and of course Super Tuesday as well going on in the US, and of course Bitcoin, our lovely hedge coin, our lovely orange coin to save everyone from impending doom from the coronavirus. That is going to tie into some major analysis for today as well. So with all of that said, I want to wish the best and the happiest of the happiest, as we always do, and I'm a little bit fired up this morning. So if you do have virgin ears, please close them or close this video. You're about to be a little bit surprised. Anyways. Let's get into live stream right on over here and look at the Krown trading app, which by the way can be found for 100% free at app.krowntrading.net. We just pushed a major update with allowing the trading journal feature, which is going to pull the last 1,000 trades from your Deribit API, and you'll be able to analyze them there. So I'm really excited about that. And I do have a link to Deribit in the description of this video. I've actually been using it recently just because, well, there's too much fucking money to be made in options, and I can't stay away for any longer. Anyways, with all of that said, the main focus here is that we see Bitcoin dominance more or less steady. We see total market cap more or less steady, but the big focus here is the open interest. We've seen open interest slowly but surely decline over the last week and a half, exactly what we've been speaking about. And again, I do not say these things to come off as arrogant. I say these so that the people who have been here for a while can now kind of, see how these things extrapolate over time and the effect of them. So we see open interest going from a little bit over 1.6 billion with a B, like a week and a half, 2 weeks ago, down to where we are right now at 1.1 billion. So a steady decline as volume. Well, we're going to look at volume in a bit, but volume has been declining as well, and price action going up. Wonder what's going to happen there to my hedge coin. What could possibly be going on here? Anyways, we'll get into that right now. And you know what? Let's start it off with some good old analysis of our loveliest hedge coin, SPY. This fucking SPY marks the major bourse for traditional markets right on over here, having that major massive bounce that we spoke about coming into Monday morning. We got that first initial downwards open, or not necessarily downwards open, but tested down, and then big massive move to the upside. Again, I'm not saying these things to sound arrogant, but I just want to follow up from the last few days of analysis on this, as we saw major volume being printed on the lows right on over here, grabbing onto one of the most important major moving averages, 377, and then boom, that sets up a nice base for at the very least a short-term reversal. And I do believe that this is going to hold on for the medium terms now, and potential to switch around the higher term timeframes, which will be had back above about 320-ish region. So still got a lot of work to do for the actual higher timeframes, but one by one, go level by level. And I do believe we're going to see something relatively similar today, as very likely to come back down, test perhaps around like 305-ish region, maybe a little bit lower than that. But I would be looking for bouncy bounce to continue to the upside from this region, as we do see all momentum oscillators poised for some more rebounding action. Daily silks have been down this whole fucking way, while price action has been essentially bouncing up at like astronomical levels. I think we had one of the biggest days yesterday to close out, 8.25% off the lows, which is pretty damn good. Historical volatility percentile incredibly redder than the devil's dick, as we like to say, which tells me that we probably going to play this out a little bit more. I'd say 315-ish region sometime this week is quite likely for the medium term timeframes, and nothing really changes from there. Again, higher term timeframes change above about 320, we'll call it, although that perhaps will come into the analysis a little bit later. Anyways, what I'm so fired up about is how beautiful this hedge is working right now, because we can absolutely overlay this chart exactly what we've been doing. And I've been going around the good old Twitter, the good old crypto Twitter spheres and the good old crypto YouTube spheres, and it's the same fucking people saying the same goddamn things. Bitcoin is your hedge against the financial meltdown of 2020. Bitcoin is going to save your parents and family and everything from coronavirus. You know what coronavirus hates? Orange internet pills. Like, what the fuck is this even coming from? Anyways, this is a SPY chart on, SPY, I should explain, is the major bourse for traditional markets. This is a line chart right on over here in the pale blue. We can put on Bitcoin in the background over here. And what do we see? Whoops, well, we should probably go to a supported time frame. And what do we see right on over here? Well, on the whole, on the macro, these love to trade together. Why is that likely? Because they're both risk-on assets. As of this moment in time, Bitcoin's not really used for anything. And this is coming from someone who actually does believe in Bitcoin Bitcoin long term, but I really want to differentiate myself from the very interesting people out there on crypto Twitter and crypto YouTube who keep on propelling this very strange theory that is not based in any reality as it is right now, that Bitcoin is in some way obtuse to traditional markets. Is this a fucking hedge? You tell me. You tell me. Over the long term, we don't even need to look at the mathematics for this. It is quite literally just as it stands. When Bitcoin is rallying in the macro in a major uptrend, so is traditional markets. Traditional markets operates in smaller percentages of those because it's a more mature market. There's more people to chew through. There's more orders in the fucking order book. You can't just sell 100 shares and it destroys the price by like hundreds of dollars like you can in Bitcoin if you were to market sell 100 Bitcoin, for example. But you can see that on the macro, when traditional markets are correcting, Bitcoin is crashing is what it's doing. Traditional markets correct at like 10 to 15% to the downside. Bitcoin corrects at about 70% to the downside on average. And we see the same thing going on over here. SPY always leads to the upside. It always makes new all-time highs first, and then Bitcoin follows afterwards. And then Bitcoin typically tops out first before traditional markets. We see the same thing right on over here during this segment in 2015 on that 15% correction. We see the same thing over here in 2017, 2018 on that. It was like about a 15% correction in traditional, 70% in Bitcoin once again, and then more recently Bitcoin topping out right here. Traditional markets top out a little bit later, and I would most likely guess that it's very, very likely traditional markets, if they can reverse here, Bitcoin will follow on the long term. So that is overall a good thing, and that is why this is relevant, and we can break this down into mathematical formulas. Essentially, correlation coefficient has actually increased. Show me that hedge, baby. Show me the fucking hedge. And you know who you are on crypto YouTube. You know who you fucking are. Tell me more, man. Tell me more about this goddamn hedge. But the correlation coefficient actually going up right now. The R squared actually going up. Well, actually, it hasn't gone up as well. But but covariance also going down. Holy shit. Stop the fucking press. My hedge is doing absolutely the exact same thing as what I should be hedging against. So what is a real hedge? What should a real hedge look like? Well, we'll look at one later, but I'll spoil the party right now. It's fucking Link. Anyways, looking at this right here, we do see that correlation coefficient showing at a 0.62. That's very, very high. You do see some similarities between correlation coefficient between Bitcoin and other, thought to be hedge-worthy assets like gold. However, I would say that, the maths say that SPY is actually a little bit stronger on the whole, and this is a monthly. We're not doing this on a day-to-day. If you're looking at this on a day-to-day, that is not proper. When you're talking about when you're talking about a hedge, you're talking about long-term type stuff. Anyways, R squared is the one that's really, really important here because it reveals what the correlation coefficient does not. It basically tells you how accurate that correlation coefficient is by running a regression on it and seeing how much of that data fits. This is astronomically fucking high, which tells me that is Bitcoin a hedge for any traditional market meltdown on a financial crisis? Absolutely not, as of this day and age. And that's even consistent with what the man himself, Andreas Antonopoulos, has said. If we were to have a financial crisis today, or even like the next 5 to 10 years, Bitcoin would be absolutely crushed. It would not be able to handle it. So yes, I do believe in Bitcoin long term. I actually do think that it has its place in this world, but I do believe that its place in this world is going to be integrated with the traditional land, and that is where I really want to differentiate myself from the other people in this space who just blindly say Bitcoin to the fucking moon, Bitcoin moon, and I have this to say to you, Mr. fucking fucking hedge. Jesus Christ, man. Anyways, I'm a little bit fired up this morning, and I do apologize about that. I understand that there's probably some new people here as well, and you probably already left the channel. So, if for everyone who's still staying right now, let's go get into some Bitcoin action as we do get back into the normal dildo timeframes right on over here. Let me get rid of this. Let me go on to Bitcoin, and let's cover up some Bitcoin action. So, we spoke about this to begin with. Remember, the open interest falling consistently over the last week and a half from 1.6 billion to 1.1.5 billion right now. And what does that tell us? Well, it doesn't tell us too much without context on price action. Let me actually put this back on dildos. There we go. And let's go into the lower term timeframes. So ever since this massive move down right on over here, we do see that volume has been steadily declining as well. So that is open interest going down, volume going down, and price action going up. What does that tell you? What does that fucking tell you?
When HEDGE
That's right, baby. When hedge, because well, we're already melting down right now, so it's not really as interesting if I were to have recorded this video about 2 hours ago. Anyways, as it stands right now, I do believe that Bitcoin is going to be testing the downside of this region once again after this rejection right at the 8950-ish level, exactly what we spoke about yesterday. I do not say these things to sound arrogant. I say these things so that the people who have been on this channel can follow up over time and see how these things operate, because you don't really see too much happen in just like a one-day span. So looking at this right and over here, I do believe that we're probably going to test the downside of this region, probably somewhere right around like 8600 once again. Does it actually break or not? I don't have a strong opinion on that. I do have a strong opinion on just the way that price action interplays between all these blue box territories. This one right in over here at about 8550, although it's really more like 8537.5 if you want to be super exact with it, is the next sort of harbinger that next sort of roadblock for that next major move to the downside. If we do break this region, I would look for a full-on push down to the 8150-ish region, give or take a few bucks. Somewhere around there looks good to me. But looking at it right now, lower term time frame oscillators are going to be switching around. Do we have bearish divergence confirmed or hidden bearish divergence confirmed? No, we do not. But we do have 4 hour Stokes getting way up there, pretty damn mature. 3 hour Stokes already turning down. 2 hour Stokes going to be down as well. Hourly Stokes all the way down. So I do believe that we probably have a little bit of a bouncy bounce somewhere in the middle of this range, maybe kind of where we are right now. But overall, if we did get another test back up to about 8900, I would be looking for that one to provide the next sort of impetus for that next move down to test this guy right around here. But again, this whole ranging type of price action, I absolutely love as an options trader. I also love it as just a straight, range trader. But for the people looking for the next big breakout or breakdown, the relevant areas that I have marked on the charts right now that actually change price action is not even these two guys. It's above 9150 to 9200 right and over here. If that area gets taken out to the upside, I would I would switch around my bias to bullish from being bearish. Now, remember, about a week ago, this was a week ago, now that I think of it, the bias switched from bullish to bearish when Bitcoin broke below 9,600 right and over here, and that will remain again until on the higher time frames until Bitcoin breaks back above here. If that were to happen, I would consider this a bear trap, and we're very likely to see 9,600 incredibly soon after that, and we'd very, very likely break that relatively soon after that as well, and head back up towards the next blue box of peace and prosperity up here in the 5-digit territory. But for right now, that's not really what's going on, and I do believe that Bitcoin's probably more likely to continue this trend out. We do have a pretty nasty 4-hour death cross going on right in over here, and let me actually just zoom in on this one, because let's see, there we go. It's going to line up with a lot of other things. So I want to put the highlight on the green and the purple, the 55 and the 200 exponentials right there. And we are still respecting the 55. So it's telling me that we are likely to play out this cross a little bit longer. And to put this into perspective, even when we've seen counter trend crosses to the counter trend to the macro trend crosses on the 4-hour, which seems to be like the lowest time frame that actually matters for driving big Bitcoin price action, we do see plenty of big moves based upon that. The last one coming in from right and over here at about 7,350 all the way to 10,500. Then we got this guy right in over here, driving price action all the way from 8,850 all the way down to 6,500. So these are multi-$1,000 moves when it's on the same side as the overall trend. But let's look at examples where it's against the overall trend, because that's going to essentially come up with a bias of how much further down would I really expect price action to kind of be bottoming out. And looking at failed attempts right in over here, this would be considered a failed one. We are going counter to the macro trend. The macro trend's kind of switching around right here, but from signal given to next high, we're talking about a 16% move to the upside on a failed signal. That's pretty damn powerful. If we go back a little bit further, this one plays out all the way from 3,500 to 14,000, so that's pretty good. And then in 2018, we got plenty of examples of failed golden crosses in a macro downturn right here. And even during these failed golden crosses, we still see some pretty nice moves based upon them. So it's going to give us a base to kind of measure things off of. So right in over here, we got a failed one for about 10%, still to the upside from signal given. We got this guy right here, which is pretty damn good, about 26.25%. If you measure it from a more enticing area, if you make some excuses for it, still 16.5% from this region right in over here. If you were to hindsight trade it a little bit less impressively, same thing right in over here, another failed attempt, 20.25% up. Same thing right in over here, another failed attempt, but not before 12.25% done to the upside. And before that, basically that was 2016 to 2018 bull run. So it's pretty much golden cross the whole way through, except for a few one-offs here and there. Anyways, let's put this into perspective. So we got the death cross right in over here. this would be the last sort of high put in before that. And let's just kind of measure what would, on the lower end, 10% being shaved off this price action look like. And then we could perhaps come up with, see if it lines up with anything else. And what do you know? Looking at it right on over here, it lines up exactly with 8150-ish region. But wait, there's more. Could there be even more on top of that? Yes, I do believe so. We can go over here, put it on a daily, and we do see that the blue 377 exponential moving average is exactly right there at about 8150-ish region. By the way, that's exactly where traditional markets did bottom out as well. They grabbed onto it for the close on Friday right on over here. And, does Bitcoin follow exactly in its footsteps? Because who knows?
Hedge.
Who fucking knows? But at the end of the day, I would be more or less forgiving here, just because the way that it's looking right now on the daily is kind of like cutting this in between. We do see that the 200 simple was regained yesterday on a daily total closure, which is good, of course, but there's actually no but on top of that. I'd actually be saying that this would be a really good base scenario right here. The question is, can Bitcoin hold above this region? So 8,700 is going to be a pretty damn big region for the lower timeframes and also the higher timeframes right now. If the lower timeframes lose it, it's not game over just yet. But if the higher timeframes lose it, then that's when I'd really start to look as another actionable trade down to this 8150-ish region. I believe there's going to be some sort of a major fib coming in this region as well. I would imagine very, very likely, as these things typically line up with each other. Let's just go, measure this one out. And what do you know? We see the 618 coming in about $100 lower than that. If I were to probably, whoa, Jesus, man! If I was probably to do this with Wix, then what do you know? It comes in right around 8,100. So around that area is where I'd look for on the next potential bottoming area. It's also kind of our breakout area from the last major switch around from what was this, early January, breaking out from about middle of the 7,000s all the way to where we got in about 10,500 region. So that's what I'm seeing right now. But the question is, can Bitcoin hold above the 200 simple on the daily? If it can, I would expect it to follow traditional markets almost immediately and reach up towards that next 9150, 9200-ish resistance that we see to the upside. Of course, that will be more accurately bespoken by breaking this blue box territory on at the very least a 2-hour total closure above about 8950-ish region. So there's two ways of getting this right now. And I would say, there's two ways of getting this right now. If we get a 2-hour or 4-hour total closure above this region right here, yes, I do think that we're going to pop back up and test around 9150, 9200. And with the way that traditional market's kind of bouncing up today, does our hedge coin follow immediately, or does it follow later? I don't have an answer for that. If I'm looking at the daily, it seems likely. If I'm looking at the lower timeframes, it seems unlikely. It seems that we probably come back down here first and foremost. But of course, this is why I'm going range from range, because it does not need my opinion on that to still trade off of, essentially. Anyways, as we're as it is right here. What was the next thing that I was going to say? Let me think for a second. Yes. So again, for the downside, for the downside, the other way that we could get the upside is if we actually do take out the high of this last little attempt to the upside that we saw at 89.67, if just a tick above there on BitMexico, and I would extend targets to about 9150, 9200-ish region, where I would expect the next sort of medium time frame test. If Bitcoin get above there, then perhaps glory times once again, and I'd look for Bitcoin to have a quick move to about 9550, 9600, and then things look more or less good on the long term. But that's not exactly where we are right now. Remember, this area, this 8950-ish region, is not just it's not just resistance from what we see on the lower term and medium term timeframes, but it's also the weekly 10 simple, which I don't even have on my charts right now. So let me just put these back on. There we go. And we do see that the 10 simple is coming in right around 8950, providing the impetus for that last little rejection. And I would say that as long as Bitcoin is operating on a weekly closing basis below both the 10 simple and the 21 exponential moving average, which we actually did break last week, I am overall looking for lower price action, at the very least 8150. I do think that there's a strong likelihood of bounce there, but I do believe that bounce would ultimately fail, and we probably find ourselves down around like the mid 7,000s region, where I do think that Bitcoin could probably have put in a very nice long-term base. I'd look at this price action running over here as more long-term type oriented stuff. I do think that Bitcoin's actually still long-term healthy, and that is also mediated by the health of the bounce of SPY. So the higher that SPY gets, the healthier that traditional markets look, the the better that I do believe that will be for Bitcoin. And I would be looking to be perhaps a long-term buyer in these regions down around here. Of course, this is not financial advice. I'm not a financial advisor, but I am happy to share exactly what I'd be doing in that sort of same sort of situations. That also means if Bitcoin starts to break below, like let's call it 7,000 on a weekly closing basis, that plays in more to the doom scenario. But as you can see, we're well and far away from there. But of course, always have to prepare the long-term analysis for this because, well, sometimes Bitcoin does decide to move a shit ton in just one day. Anyways, looking at weekly oscillators right here, we do see that weekly Stokes a little bit tired in this region, although they're not crossing down just yet. I think that CMEs are yes, indeed they are, but not too forcefully here. Anyways, going back to spot price action, we do see more importantly that weekly RSI has broken the exponential, broken back down below the neutral, or kind of back down into the neutral zone. More importantly, after rejecting the bullish control zone, which tells me that yes, we're probably going to come back down and grind out this zone right around here. And I would be looking for this, if this is going to be healthy long term, for to kind of like round out a bottom on the RSI. And I look at the RSI as kind of like a line chart for whatever the fuck I'm looking at, and in this case Bitcoin. This if the RSI could come back down around here, that would look like actually long-term accumulation, which would be really healthy. The other problem with the higher time frames that I want to put the spotlight on right now as well is the monthly look, as we spoke about this. As we spoke about this yesterday as well, but I want to kind of hash out this idea a little bit more. So we did pop back up, test the 10 simple. At the first pass, it's a rejection. I don't think that that's a surprise to anyone. What happens next is going to be the big kind of insightful thing of it. More importantly, we do see that monthly Stokes can very easily cross back up to the upside here, but that's only going to happen when Bitcoin really starts to confirm some medium and higher timeframes above about 9150 to 9200. So that's again why that area is so damn important. And if Bitcoin does regain that area, I'd look for it to quickly follow traditional markets. A very healthy bounce thus far. By the same token, we do see that monthly RSI is what it's saying is, Krown, go fuck yourself. This is exactly what it's saying. That's probably like a lot of people in the comment section are doing right now as well. Krown, stop yelling, stop talking about hedging, stop talking about this. It's like, all right, interesting. Anyways, but looking at this right in over here, I can't really make too much off of this because yes, we are below the exponential on this, but we are kind of in the neutral zone, so there's no real bias to be had with it. And realistically, it tells me that we're very unlikely to end the month in this region right here. What's most likely to kind of happen this month is we either have a massive move to the upside or we come all the way down to about 7,500-ish region. So I do think it's going to be a pretty damn fun month this March. But more importantly than any of that is the one big indicator that I really put a shit ton of weight on only the monthly, and that is the accumulation distribution indicator, which maintained its negative slope coming in from January. That was my biggest issue with this price action right over here. Everything else was making me bullish, but the accumulation distribution indicator once again gets it right. With the second that it printed a negative slope was a second that we do trade a little bit higher, but it ends up falling over, of course. And to me, historically speaking, anytime that we've had a slope change on this, doesn't matter if it's red or green, those have been major pivots on the market. We're looking at the last major one that we had running over here in January 2019. That was quite literally right on the goddamn low of Bitcoin. Sorry, I don't mean to use the Lord's name in vain. It's just a term of endearment, and I don't really intend any sort of hate or harmfulness towards the believers out there. Looking at it right on over here, we do see another phase change, another slope change in March 2018. That would have told you to sell all the way through 12,000 down to 3,100. And going back a little bit further than that, we do see that it switched around right on over here in August 2015 and switched to the downside right on over here in February 2014. So it's pretty damn consistent long term, and that is what I put a lot of weight on. And one of the big things making me consider that Bitcoin does come back down all the way probably to the monthly 21 exponential moving average, but I would look at that as an opportunity long term as well, especially if traditional markets can keep it up and not crash back down. Let's call it like 295. That would be where things start to look hairy once again. So yes, right now is kind of like a limbo time for Bitcoin. I don't really have a strong opinion on what it's doing. There's a lot of things that make me want to be both bearish and bullish in the short term, but the biggest things making me want to be bullish is not necessarily that it's a fucking hedge. It's the fact that it's actually quite correlated with traditional markets, and this whole this whole notion that Bitcoin's not correlated with the traditional markets is just mathematically it's fucking wrong. From a fundamental perspective, it's also wrong. I mean, again, listen to Andreas Antonopoulos. I will not try to speak on his behalf because he does such a better job than I ever could hope to. But definitely go listen. Just go type it on YouTube. Like Andreas Antonopoulos explains why Bitcoin would not do well during a financial crisis right now. That can change over time, absolutely, but we have to deal with what we're dealing with what's in front of us right now, because a hedge doesn't do any fucking good if it's not going to act for a hedge for like another 15 to 20 years. And that, could happen. I mean, these things typically move slowly, and people looking for this to just absolutely rock, rock that trend like today, I think it's just misguided. And again, I'm not here to tell you what to do. I'm just sharing my opinions on it. You can hate it, you can love it, and I'll still happily share. But as it stands right now, we are kind of at a critical moment as far as the daily goes. If Bitcoin does reject down here, if Bitcoin essentially fails to get back above, especially like 89.50ish region, we will see the yellow 21 exponential moving average cross to the downside of the green 55 exponential moving average. And the reason why this is such a big deal right now is because this is setting up for a perfect cross coming. So if it does break down, it's going to set it up for a perfectly bearish, a perfect bearish cross, similar to what we saw right on over here. This was a perfect bullish cross. We see the cross happen during a nice phase of consolidation. Boom, massive move to the upside, all the way from 8,000 to 10,500. Same thing all the way down from here, getting all of the momentum from about 10, or basically like about 10.5 all the way down to 6.5 right on over here. It doesn't cross the upside after that. Very, very nice. And then all the way through what was it? February 2019 at about 37.50 all the way to 14,000 as well. So pretty damn good. And that's the thing, is we are actually setting up for yet again another very, very good efficacious cross of this. Typically, if price action is near the actual cross, then that cross actually happens, price action will follow, and it will follow quite drastically. So it's a ticking time bomb. The longer it takes Bitcoin to break above 89.50 or just not break it at all, the more time that these will have to approach each other. Now, it's not a full consideration today. As you can see, even if Bitcoin were to break down today, which is probably unlikely to break down today, it would still take probably somewhere around here, which would be in about half a week to a week, where it actually could have a chance to officially cross to the downside. But because this consolidation is coming in this region right here, it's setting up. So we're either going to have a pretty nice face melting move to the upside, probably back up to a little bit above the mid 9,000s, or down, at the very least to 81.50. And personally speaking, I do think that Bitcoin would probably find its footing somewhere in this region right around here in the mid 7,000s. This should naturally line up with a bunch of the volume profile metrics, which we can throw on right now. And what do you know? We do see that the point of control is coming in right around about 81.50ish region, a little bit lower than that, but that's okay. It's also a major fib, as we showed earlier, also just a major moving average, and also the nice blue boxes of peace and prosperity. By the same token, we are kind of holding on to this higher value node right here, right now. And the next one to the upside is right around 90, 91.50, 9200ish region. So we can see very easily all the big pivot points on the market. And of course, to the downside right on over here, our current lows about, mid to low 7,000s would be the next area if Bitcoin did break 81.50 to the downside. But again, we're getting a little bit too ahead of ourselves. So I do want to take this one step at a time, as we do see all the major moving averages, especially on the daily, start to resolve themselves, which tells me that we're in a decision phase. And as far as the macro goes, people are all not people, that sounds just so condescending, but what I see a lot of people doing is that they'll zero in on the fucking 4 hour down here, thinking that this is a higher time frame, and then judge the long-term direction based off this. What we really want to be looking at is the higher term time frames. And I do think that the weekly is problematic, especially as long as we are below the 10 simple. So that will obviously just, naturally take time. And speaking of the 4 hour, we actually just closed one right here. Let's see how that changes the momentum oscillators. We're going to see 4 hour Stokes officially cross the downside, very, very likely. We see 4 hour RSI. Are we doing anything of note here as well? No hidden bearish divergence, so we did make new highs, to be fair. Well, then we compare it to maybe this point over here. At that point, we kind of would, but that's a little bit too far away to be efficacious. I think we'd have to go to maybe a 12 hour, and if we don't see it on a 12 hour, then it's probably not. Looking at the 12 hour right on over here, what do we see? Yeah, we do see... No, we don't. No, we do not see hidden bearish divergence. Maybe on a daily. Well, daily hasn't confirmed a local high, so no, that would just be not available anyways. Here's the thing, though. The medium time frame oscillators, like the 12 hour Stokes, which have been so fucking accurate, especially from this region here, calling a lot of the major lows for the last couple years, have once again crossed the upside. So I am hesitant to say that Bitcoin's going to get continuation to the downside immediately. The most bearish thing for Bitcoin right now would actually be to trade sideways underneath 89.50. Any consolidation underneath 89.50 is not good. Breaking 89.50 the upside starts to open up the blue skies once again. But I would really look for traditional markets to kind of like set the tone for that. So I am expecting traditional markets to once again kind of trade back down to kind of maybe like 305, I think is what it was, and then probably bounce from there. If the bounce is good, then actually it could be quite likely that Bitcoin does follow through with this, and we don't have to worry about all those downside targets. We did see all of the bullish divergences, all the bullish divergence plays play out up to the 12-hour yesterday, and that's what kind of enticed me to I hate that word call, because I really hate it when people say on like crypto Twitter like, I called the move. It's like, who gives a fuck if you called it? It only matters if you trade it. Well, at least in my opinion, but feel free to disagree with me, because, well, when hedge and when fucking calls, I guess. But yeah. That's what gave the bias to the upside yesterday in Bitcoin, as well as the traditional markets as well, likely bouncing too, and then being correlated. But going onwards and forwards from here, now I kind of like step back and just watch the market. I have no positions. I took both the easy trades off of this region right over here at about 8,600, and then off of here at about 89.50. Now I'm back to neutral, just watching, and we'll probably play some options later this week if things stay steady, probably by tomorrow. Anyways, what else do I want to look at? I want to look at the 2-day and 3-day. I realize I'm already been talking for 30 minutes here. Holy shit. 2-day actually had a pretty damn good close here. Would kind of provide the bias again to the upside, and same sort of thing showing in right around the 9,200-ish level. The 21 exponential moving average promptly put in that region. What about the 3-day? Do we see anything of note here as well? Potentially, yes. The 3-day could put in hidden bullish divergence, which would be very, very powerful, and that would also help kind of round out the bias for not to move to 9,150, 9,200, but probably like 9,600. And that would be and this would be confirmed as a local low if we can trade above the high of this consolidation, which as of right now about 89.69 region. Now I would like to see at the very least a medium time frame, like a 12-hour close above there, or even a 4-hour probably does it. But you can see that we're really in limbo here. It's either going to be a very nice move to the upside into this region right over here, or a nice move ultimately back down to about the mid $7,000 to low $7,000 base. If I had to call it right now, I do think that Bitcoin's a little bit more poised to go to the downside, but it's probably going to be a slow grind, and this still looks overall corrective to me. I'm not bearish on Bitcoin, especially not when traditional markets are having a nice bounce as we saw yesterday. But let's start to look at the altcoins now, because this video is already way too long, and I do apologize about that. Let's look at what an actual hedge looks like right now. This is your actual hedge. This is what an actual hedge looks like. Link, and again, I know absolutely no Link. I don't even know what the fuck it does, but it's as a chart for the last 2 years, ever since I started looking at it, somewhere right around here, it's been really fucking good. This is what a hedge actually looks like. Just going very, very strong, regardless of what Bitcoin's doing, regardless of what the world markets are doing, regardless of what anything else is doing. This one continues to be very constructive over a long period of time, and I would expect new all-time highs. Actually, we're getting continuation on a weekly basis right over here. Phenomenal moves, and I do believe that there's more. All momentum oscillators are very, very healthy. We see that weekly Stokes got plenty of room there. Weekly RSI looking damn good as well. It will be creating some divergence at some point, but I don't think that divergence is going to play out until we get like some actual like significantly new highs. There's no more real I don't have any like measure moves to make on this one. I don't see any like obvious formations in here that already haven't played out. I think that we're just getting continuation. We're kind of in price discovery, and I would expect that to continue until you get some sort of like major reversal formation, major bearish divergence playing out, and then we can come back to it. Other than that, let's go check out the other what do we call them? I don't know. The other things in this market. Looking at Mr. Buteau right on over here, this one also kind of looks like it wants to give it's got the same areas, right? It's got the exact same areas. The 21 exponential moving average driving this price action. If we get rejected here, it's gonna be a nice leap to the downside. I mean, ultimately, I do think it's gonna bottom out somewhere right below 200. By the same token, if we can even just get like a 12-hour dildo close above the 21, I do think that it's gonna pop back up to the prior highs and beyond. And momentum oscillators are turning up here. We see daily Stokes crossing. We do see daily RSI is testing for the first time the bearish control zone and rejecting it, as you'd expect. So let's go narrow it down into a lower term time frame. 12-hour looks okay here. If the 12-hour closes above 235, 236, this one's going to rocket back up to the to the highs like 262, 270ish region. It would look very, very good. And there's your fucking hedge coin once again, following traditional markets absolutely to the goddamn T. By the same token, if it gets rejected here, we have the same major cross going on to the downside. That's kind of in question right now. If it gets rejected right here, not just very likely, it will come back down to like the 215 base, but it'll very, very likely break that all the way down to about 190-ish region. So as it stands right now, we're in a major decision phase, and I do believe that the weekly still gives the bias on this one as to the downside. I mean, we do have hidden bearish divergence. That's the problem with all these charts. The higher timeframes do not look all that good. The lower timeframes are showing some healthiness, showing some promise, but the higher timeframes not so much. Hidden bearish divergence between this point and this point. I mean, usually I'm going to be looking for at the very least a test down to like the 10 simple, and usually like the low side of the range. And I do think that the low side of the range in this case would be as far as the macro goes, somewhere along this trend line, which is creating a bullish reaccumulation formation on the low, on the lows. It's kind of how Bitcoin bottomed out in 2019, which is good, but it would also imply that we're going to spend a lot of time within this region and probably break out later this year, like in October, November, somewhere right around here, and that should be the face melting move. But for right now, we're going to see weekly Stokes very likely cross down at the end of the week, and hidden bearish divergence, playing out all the same. I am skeptical for this one to follow immediately to the upside. Although then again, looking at the 2-day, the 2-day looks good. 3-day, not as much. But the 2-day could get a golden cross if it does make that next leg to the upside. So if we do get another leg up here, should be pretty damn good. And we'll confirm all that. But again, I don't want to really make a call here, because if I'm going off of traditional marks, I am looking for more upside. If I'm just looking at Bitcoin, I'd be more geared towards the downside, to be fair. Other than that, I think we can wrap this up with Mrs. Litecoin and then go on to Bitcoin. And Mrs. Litecoin's the most problematic one. Weekly destroying all major moving averages, and I do believe we did get that test back up to the $62 region, exactly what we spoke about yesterday. And as long as we're below there, I'm bearish on this one coming back down probably towards $46, and looks eerily similar to what we just saw on Mr. Butyrol, creating a nice ascending triangle off the lows, and probably set for a breakout somewhere right around here. Actually, this one even later than that, maybe even like 2021, like end of first quarter 2021. Could take longer. But again, as long as this one is held below about 62 and a half, 62 and a quarter, even on like a daily total closure, it's a hard one to love. And this one will get the death cross again on the daily if it just breaks below the $59 region right here on a daily closing basis. So we're at like critical levels right now, because if we do get another leg to the downside, all the mark's going to come back down. Bitcoin probably like 7,500 overall after like a nice bounce at 8150-ish region. But I wouldn't necessarily be bearish off that. Like looking for those 5,000 or 4,000 or $1,000 targets that I think some people are talking about as well. So again, have to kind of like curtail this back, because I do think it's disingenuous to like talk about these major massive moves like Bitcoin to 100,000 or Bitcoin to 1,000, because what's most likely here is that Bitcoin's going to be playing in a range between about 10,000 and 7,550 for the next couple months. Okay, cool. So let's actually line up and come up with some probabilities here. So again, going back down to the lower term timeframes on Bitcoin, we do see blue box to the downside, 8550-ish region, we'll call it. Blue box to the upside, 8950 to the upside. And these are only for the preliminary ranges. If we do break to the downside, it really does have major implications for the long term, although I would be looking for a very nice bounce off the 8150-ish region right around here. And for the same, and by the same token to the upside, it's not this area that does all that much. It's this one right here, 9150 to 9200-ish region. So let's go see what the probabilities are on these levels. Let's take everything else off and put on only the expected moves with regards to historical volatility percentile and what do we see right around here. Let me go to perhaps a 12-hour. This one's still getting it more or less right. And once again, the probabilities are actually now slightly geared towards the upside. We do see that the top side of the first deviation here is well above 8950, to be fair. It's actually right around 9030-ish region. So that would encompass this whole region, which does suggest that the probabilities actually are on an upside breakout. Because if we even do just take out yesterday's high at 8967 on Mexico, I would look for extension to about 9150-ish region, 9200, which is probably where we expect the second standard deviation, the 1.5 standard deviation to be, which is going to be about a 43% chance right around here. So if we were to only take one side of that, it would be about 10-ish, 9 to 10% that we actually do break above this level in the next 12 hours, somewhere around the daily total close. So is it likely that we do break above that level today? No. Is it likely that we test it? Yeah, actually, yes, somewhat, somewhat likely. By the same token, a break to the downside today, very unlikely. Less than 16% chance in the next 12 hours. If we go over here to a daily, we can extend that even further. Again, less than 16% chance, kind of below the current lows in the next day. So if we do break to the downside, it's very unlikely to happen today. We're probably going to spend some time going sideways within this region. The question is, can Bitcoin break any of the critical levels, which would offer up some nice trade activities? And again, right here, we do see that the probabilities are on the upside. First standard deviation to the upside is 9150-ish region. So Bitcoin does look like it actually, probably does test that region today. The question is, can it get above it? Can it close any time frame that actually matters above it, which would initiate that next leg up for another $300, which really starts to make this whole thing look like a bear trap, and then we'd probably be, put back in around the 5-digit numbers. That's to be decided. So I would say I wouldn't say, but maths would say it's less than a 60% chance to confirm that today, and it's less than a 16% chance to confirm the breakdown today as well in the next 24 hours worth of trading period. I would also say though that looking at it right on over here, we do see that the second standard deviation to the downside right around that 8150-ish region would be a very, 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 very nice area once again, because it is outlined by this area saying that it's less than a 2.5% chance that we actually do break down below there in the next 24 hours worth of trading. So if we did get down around there, it'd be an obvious trade. For at the very least a nice bounce, but I don't think that happens today. What's actually most likely to happen today is that we do test the upside 9150 to 9200-ish region, and with traditional markets, probably going to look to at least test the upside once again. I do think that bodes well for Bitcoin. So we'll see how it does around that region. If it can break above there on a time frame that actually matters, then Boolahs are more or less back in control, I'd imagine. But until that happens, I would be very skeptical of this, because not the picture of health and fitness as far as charting metrics go right now. So let's break it down one more time. 89.50 the upside allows, or sorry, not allows, sounds so silly, but would open up the doors for the move to 91.50 to 9200. That's where things actually can change for the higher term timeframes. If we do get above there, again, less than a 16% chance today. But if it were to happen, I'd look for a quick move up for another $300, and this starts to take on once again a bullish bias long term. To the downside, bearish bias remains, especially as long as below this area right here. In the shorter term time frames, more or less neutral, just playing between 89.50 and let's call it like 85.50 the downside. It's really like a few bucks lower than that. If we do break below the bottom side blue box right here, I would look for a quick move down another $300 to about 81.50ish, give or take a few bucks, and I'd look for a very, 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 very big bounce there, and then it'll probably take some time to resolve itself, and we'll come back and analyze it after that. So I think that's a good time to end this one. Holy shit, man, it's already 41 minutes. Do apologize about that, but yeah, I think that's all I can say for right now. I think that'll do it for me. I want to once again wish you well. I want to apologize for all of the autistic outrages. I can't promise that they'll stop, but I can apologize for them, which should kind of make up the same thing, right? Anyways, take care, and until next time.